I am AI Avatar of CA Ratamundra. India's gold import system is currently facing a significant regulatory pause. Since April 1st, authorized banks have reportedly stopped importing gold. But this is not due to weak demand. It is due to a missing compliance piece, the IGST exemption notification. Banks play a critical role in India's bullion ecosystem, handling nearly 40% of total gold imports. When banks pause imports, the impact spreads quickly across jewelers, traders, and even consumers. This situation highlights how even a small delay in regulatory approvals can disrupt an entire billion-dollar supply chain. The issue arises from two separate regulatory requirements working together. First, banks need authorization from DGFT and RBI to import gold. That part is already completed. The government has updated the authorized bank list for the next 3 years. Second, banks need a tax exemption notification from the Finance Ministry to avoid paying IGST during imports. This notification for FY27 is still pending. So while banks are legally allowed to import gold, they lack tax clarity. And without that, they are choosing to pause operations to avoid financial risk. Under the current system, banks are allowed to import gold without paying IGST upfront. Instead, they collect GST when they sell the gold domestically to jewelers. This structure ensures smooth cash flow and prevents large capital blockages. However, without the exemption notification, banks face a dilemma. If they import without exemption, they risk tax penalties. If they pay IGST, their working capital requirements increase significantly. To avoid both risks, banks have chosen the safest option: pause imports until clarity is restored. India's gold imports have been increasing in value significantly, from $35 billion to over $70 billion in just a few years. Even though volume has slightly reduced, prices have increased sharply. This means any disruption now has a larger financial impact than before. When imports pause, supply tightens. This leads to higher premiums, increased costs for jewelers, and eventually higher prices for consumers. The impact is not just regulatory, it directly affects the economy and market stability. Banks are the most directly affected stakeholders in this situation. Even though they have authorization to import gold, they cannot proceed without tax clarity. Importing without exemption may lead to heavy IGST liability. Additionally, paying IGST upfront could block large amounts of capital, affecting liquidity and profitability. There are also compliance concerns. Customs authorities may question transactions without proper exemption documentation. So, the pause is not a business decision, it is a compliance necessity. Jewelers and bullion traders depend heavily on banks for a stable gold supply. With banks pausing imports, jewelers may face delays in sourcing gold. They may have to rely on alternative suppliers or domestic recycled gold. This can increase costs, disrupt inventory planning, and create pricing volatility, especially during peak seasons like weddings or festivals. In short, the impact quickly moves from banks to the entire jewelry industry. Customs brokers and clearance teams are also affected. Without a valid IGST exemption notification, filing the bill of entry becomes complicated. Customs officials may require IGST payment or delay clearance. There is also a risk of cargo being held at ports due to incomplete documentation. This situation shows how regulatory gaps can directly impact logistics and trade operations. SEZ and export-oriented units are indirectly affected, but significantly. Many of these units depend on banks for bullion sourcing. Any disruption in supply can delay production schedules and exports. They may need to explore alternate suppliers, update compliance documentation, and manage working capital more carefully. For consultants and compliance teams, this is a critical time to ensure all regulatory conditions are properly aligned. The core issue is simple but critical. DGFT authorization allows banks to import gold, but without the IGST exemption notification, the system remains incomplete. Both authorization and exemption must work together for smooth operations. This gap is not due to policy change, it is likely an administrative delay. But even such delays can disrupt entire industries. The key lesson here is clear. In regulated industries, compliance is everything. Even when demand is strong and systems are in place, a single missing notification can halt operations. Stakeholders must monitor regulatory updates closely, maintain proper documentation, and plan contingency strategies. Because in global trade, especially in sectors like bullion, timing, compliance, and coordination are everything. Moon says, and Management Consultants LLP, a trusted partner for SEZ and IFSC Excellence. a pioneer in establishing SEZ and IFSC units within Gift City and India, delivering end-to-end IFSC setup, operational support and handling, compliances, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.